As humans, we are definitely hardwired to try to find patterns in everything, from tea leaves to midterm elections, right? And I think you're right. You know, you look back at history, there is really no definite trend about making investment decisions based on midterm elections. And so I advocate process over prediction at this point. And I tell my clients that if there aren't any abrupt changes personally in their investment outlook, in their investment horizon, to stay the course, because these things will play out, and we just really can't base investment decisions on the predictions. I know there's a lot of history, and it makes it very interesting to look back and say, what if this were to happen? But in terms of actual productivity of that, all that intellectual firepower, I don't think it's worth making investment decisions on.
Joe, of course, today it is just predictions. We don't exactly know how things are going to turn out. Many do predict that the Democrats will take the House. That means we could be looking at a divided government. But you say the markets actually like division. Tell me why that's the case.
Well, the market today reflects everything we think is going to happen. And that means that if we don't have to worry about the tech companies being investigated, or more noise with tariff wars, that is less to be concerned about. And when you have a standoff in government, Republicans on one side, Democrats on the other, nothing gets done, which means we don't need to worry about the government passing a lot of new initiatives from healthcare to anything else. There'll just be a stalemate. And that's actually the winning combination for investors. So it is the best combination, interestingly enough, because then you get both voices and they drown each other out, and we can continue on our merry way with everything that we know today. So you really do prefer that outcome, even no matter which party you're with.
Are you, Joe?
Second thing that I'm sorry,
Joe, are you worried about slowing corporate profit growth, and maybe a slowing economy globally, and maybe even in the U.S.?
Yes. Yeah, and we clearly are not experiencing it here in the U.S., but our multinationals are. You've seen big corrections in the emerging markets, 20% plus, being hurt by the dollar and rising interest rates. That should not be ignored, because our U.S. companies here, as much as 50% of their earnings comes from the rest of the world. So we get very affected by what's happening. So this tariff battle, to me, is the big canary in the coal mine. And I really wish that they would find a resolution to that, because it puts the Fed in a very tough spot. Because what do tariffs do? They increase prices. They reduce efficiency, which is inflationary. And so when you have a very tight labor market and then an administration that's doing things that make inflation more likely, it puts the Fed in a corner, making them have to raise rates more than they might otherwise have to. So
Peter,
it's
very
not
quickly,
to be ignored.
Peter, very quickly, if I could just get your thoughts on stocks that you like, regardless of what happens tomorrow during the election.
Well, I still love NVIDIA. I love United Rentals and Caesars Gaming. I think these companies have been sold off dramatically. And when you strip away all the political aspects and you start looking at fundamentals in terms of earnings potential and the addressable market of these companies, I think they are still very, very strong. So I'm advocating for my clients to hold and for new clients to add to those names.